Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everybody. Ben Rains here with top stock picks at Zacks. Today I'm looking at Micron, which trades on the ticker MU. The Chipmaker artificial intelligence company raised its guidance in the middle of August as it benefits from the hyperscale-driven data center boom. Yet Micron stock stalled out at its 52-week highs in the top of a critical range. Still, its improving earnings outlook has MU as a Zacks ranked number one strong buy in its projected post-blockbuster sales and revenue and earnings growth. It's rivaling NVIDIA. Investors can also buy, the best part is they can buy Micron trading 20% below its all-time highs and 30% below its average Zacks price target. To start September, the tech stock also pays a dividend, and it's part of an industry that's in the top 15% of over 240 Zacks industries. And its valuation levels are helping make Micron even more of a screaming buy right now. So despite NVIDIA's report last week, it had a record-breaking quarter. The stock pulled back, but it was simply due for a pullback. So all that really matters after NVIDIA's report is that its CEO confirmed that the AI race is still very much on. So with that said, Micron is a leader in memory storage chips that are critical components in everything from smartphones to AI data centers. Its growth in ability to expand in key areas of the economy has seen the semiconductor stock climb 1,500% in the last 15 years. That crushes the Zacks tech sector, which is up just 675%. And more recently, it's compelling AI long-term AI investment because of its high bandwidth memory chips, so HBM, which are critical for AI workloads. So it's working directly with AI chip powerhouse NVIDIA and NVIDIA's closest rival, which is AMD. And Micron's CEO has said that AI will drive record demand for memory chips. And the memory chip company is expanding its manufacturing footprint in the US as part of a larger reshoring boom. It's also worth noting that Micron is a vertically integrated semiconductor company, meaning it designs, manufactures, and tests all of its chips in-house, unlike fabless companies such as NVIDIA that outsource their manufacturing to foundries like TSMC. Looking back, it posted record Q3 growth in including record data center revenue, which more than doubled. And it's also expanding its manufacturing footprint to, quote, satisfy AI-driven memory demand. And then most recently on August 11th, the company raised its Q4 guidance. And now we're going to head over to Zacks.com and our ZRS system to dive into more about Micron. All right, we are now over on our ZRS screen, and I have Micron's ticker pulled up so we can see this, what I've mentioned. Over the last 15 years, Micron stock's up 1,500%, blowing away tech, which is up 675%. If we look over the last 10 years, we can see what Micron has done. It's outpaced tech, but we can see it's kind of chopped around a little bit more recently. So even as tech broke out, Micron's giving investors a little bit of an opportunity to buy on the dip. As I mentioned, is trading 20% below those June 2024 peaks. It stalled out several times at this critical level. So we'll go over here. We'll take a little bit of a technical view of Micron here to see why it might be worth buying. So we can see it right when it broke out after that August 11th improved guidance. It stalled out at those 52-week highs, which is right at the top end of this range where it broke out to all-time highs last summer. So we can, if you're an investor, you can buy, or a trader, you can see it's holding that 50-day moving average, which is a positive sign. And if it is finally able to break above those levels, we could see it possibly hit those highs. So it's trading 20% below its highs and 30% below its average Zacks price target. And then it's also we can go check this out in a 10-year time frame and see what things look like. So it's still, that's that same chart stalling out there. And it's above that long-term 50-week moving average, which is a positive sign. And then I'll quickly go take a look at valuation-wise. This chart might look a little odd because some years Micron's earnings were negative. So I'm going to just go to 6 months to give perspective of where Micron's trading. So this has popped up a little bit recently, but we can see Micron is trading well below tech. The chart's a little messed up here, but tech's trading at 27.6 times forward earnings. Micron's trading at 16. And we can go ahead and we can take a look at its PEG ratio, which is factoring in that longer term earnings growth outlook. We can see it's trading at 0.3 compared to tech's 1.6. So the value is really there for Micron at the moment. And then we'll quickly go take a look at its growth in terms of its revenue growth, so that when we look at our estimates, we have a perspective here. So we can see, as I mentioned, kind of has gone through some cycles where it used to be really heavily impacted by consumer spending on PCs and smartphones and laptops, and had a huge dip, and now it's back up. And if we look here, it's done the highest it's ever done is about $30 billion in revenue. Did that in 2018 and then 2022 for fiscal 2022. And then that's putting into perspective this outlook. We're calling for 47% growth in the fiscal 2025 to get all the way up to 37, nearly 37 billion. And then another 34% growth next year to get all the way up to nearly 50 billion. So $20 billion more than its all-time high. So breaking well above those records as it benefits from that AI data center boom. And then the bottom line, we're calling for roughly 518% growth on the bottom line to go from $1.30 to $8.04. Another 62% growth next year to get up to $13.05. And we've seen those positive revisions happen since it provided that upbeat guidance in early August 11th. So we can see that positivity there. And we can see that it's beat by about 10% on average over the last 4 quarters. And then we can take a quick look here. We can see these are the same estimates. So trending right back in the right direction here. For this is the longer term outlook for next year, skyrocketing. And we can see that those estimates are trending heavily in the right direction. So that 10% boost for Q4, which is a really positive sign here for Micron. Overall, Micron's revenue often fluctuated alongside consumer spending in production cycles across smartphones, PCs, laptops, and more. But the rapid expansion of AI data centers could see Micron finally break free of that dreaded cycle. All in, it might be time for investors and traders to consider buying Micron right now. And that does it for me. And now I'm going to send it over to Nina.
Thanks, Ben. I'm Nina Mishra, and my topic today is Arista Networks. The ticker symbol is ANET. Arista is a pioneer and leader in cloud and AI networking. So let me share my screen and talk more about Arista Networks. So recent results reported by technology giants, they reaffirm that the AI trade is well and alive, and investors have been looking particularly at pick and shovel companies, particularly chip makers like NVIDIA. They have been the biggest beneficiaries, and they are now also looking at other pick and shovel players, and these include data center providers of data center technologies like Arista Networks. And over the past few days, these stocks have pulled back a little bit on tariff-related, trade uncertainty-related, and other macro-related concerns. And I believe that this could be a good opportunity to buy the dip. So if you go to the quote page on Zacks.com, you will see that it is currently, Arista Networks is currently a Zacks rank number 2 buy rated stock. And it reported excellent earnings. And in fact, its revenue surged 30% and adjusted net income that surged 38% from a year ago quarter. Now, to talk a little bit more about what it does, it mainly provides high-speed networking gear, switches, and routers for data centers. And its main customers are Microsoft and Meta platforms. And we know that these two companies have been spending a lot of money on their AI data centers. They also have a lot of money. So Arista is going to be one of the biggest beneficiaries of that spending by these tech giants. And when it reported strong results, it also raised its full year guidance. And in fact, the stock had surged more than 15% when it reported its results early last month. Now, looking at the detailed estimates, you will see that analysts have been raising their estimates for the current year and next year after those strong results. And that is why the rank has gone to number 2 by for this particular stocks, because our ranking methodology is based on earnings estimates revisions. Now, looking at the longer term price consensus and EPS price chart, you see a lot of greens there. You will see that the company has not missed during the past 5 years. And, that particularly over the past few years since the AI revolution has started, the company has been reporting beats after beats, but there are opportunities to buy the dip, like we have seen in case of NVIDIA as well. And you will see that the stock, which is up about 22% year to date, it's not cheap. It is currently trading at a forward PE multiple of about 48 times, but that is below the 5-year high. And any dip in the shares, I think, is a good opportunity to buy given its role in the AI revolution. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with 2 more very interesting topics.